lot of economic news coming out in the week ahead, unless you're a particularly keen student of Swiss and Chinese interest rates or German and Belgian industrial sentiment surveys. As a result, company news is likely to dominate, and there's an informative slate of results releases and trading updates coming up, where the following may be worthy of note and further research. Wilmington on Monday the 22nd of September, Smiths Group, Kingfisher, Henry Boot and Raspberry Pi on the 23rd, JD Sports Fashion, Saga, Enquest, Pinewood Technologies, Aving Trans, Everyman Media on the 24th, Halma, Hitch, SSD, FS Furniture and STV for an Alphabet Soup on the 25th, and Gemfields will round off the week on the 26th. Within that list, we're going to focus on 3 of the 4 FTSE 100 firms mentioned, namely Smiths Group, Kingfisher and JD Sports. Now, shares in Smiths Group trade at an all-time high thanks to solid operational performance, the ongoing and, dare I say, long-awaited breakup of the company, and improved cash returns in the form of increased dividends and share buybacks. Having said nothing of note since its third quarter trading update back in May, Smiths is now due to release its full-year results to the end of July. Chief Executive Roland Carter has offered 3 items of financial guidance, and these will be the benchmarks for this set of full-year results, namely organic sales growth of between 6 and 8%, an organic increase in the operating margin of between 40 and 60 basis points, or 0.4 to 0.6 percentage points, and a profit to cash flow conversion ratio of more than 90%. Much interest will also focus on any steer he provides for the year to July 2026 that's just begun. On a headline basis, analysts are looking for a 5% increase in sales to £3.3 billion for the year just ended, and a broadly unchanged figure for the year just begun. In terms of adjusted operating profit, analysts are looking for flat at $526 million for the year just ended, and a jump to $590 million in the new year. Dollar weakness may not help the headline numbers, but the organic comparisons will strip out that effect. Smiths derives around 45% of group sales from the USA, but it doesn't expect President Trump's tariffs to have a big effect thanks to its policies of locally sourcing. Shareholders will also look for an update on the Future Smiths project. The company sold its medical division in 2022 for $2.4 billion in cash and stock, and it's announced further changes to its structure. The plan is to sell Interconnect by the end of the year, and then sell or demerge Detection after that, to leave John Crane and FlexTech as the core operations of the company, which will have around annual sales of £1.9 billion and adjusted operating profit of around £370 million. Corporate activity will fund further shareholder returns. Smiths increased its interim dividend by 5%, and analysts have penciled in a 6% hike to the total payment for fiscal 2025 to 46.5 a share. A new £350 million buyback has already added to the £150 million one that was launched last year. Kingfisher, well, it will release its first half results on the 23rd, the same day as Smiths, but the two companies' share price momentum could hardly be more contrasting, since Kingfisher shares are no higher than they were 5 years ago. The lockdown DIY boom is over, the housing market remains slow, and consumer confidence low in the UK and France, while higher wages and input costs mean management continues to focus on costs, even as it looks to emphasise building up revenues from trade customers as well as individual consumers. For the first half, analysts are looking for group like-for-like sales growth of 1% for a headline figure of £6.8 billion, with the UK outperforming France, Poland and Spain. Adjusted pre-tax profit at group level seen reaching £334 million, pretty much flat on the same period last year. Shareholders will then look to see whether Kingfisher meets guidance or changes guidance for the year to January 2026, where Chief Executive Thierry Garnier's current steer is for adjusted pre-tax profit of between £480 and £540 million, compared to last year's £528 million, and free cash flow £420 to £480 million, down from £511 million in the year to January 2025. Now, that free cash flow is funding a share buyback scheme, where Kingfisher is already getting to launch the third tranche of a £300 million programme. Based on analysts' forecasts for an unchanged full-year dividend of 12.4p a share, it seems logical to assume the interim payment will match last year's of 3.8p a share. Finally, we come to JD Sports Fashion and its first half results at the end of July on the 24th. August's trading update was relatively reassuring and helped to maintain the share price's momentum and recovery from this spring's 5-year low. The good news from that update was that the US and Asia showed improved like-for-like sales comparisons, even if the UK and Europe faltered a bit. In addition, boss Regis Schultz noted that he expected JD Sports to meet analysts' full-year profits for forecasts, albeit before any possible impact from American tariffs on imported goods. So the key to the figures may be any more comment that comes out on that topic and what it means for pricing and costs, especially in the US wholesale market. For the moment, analysts expect adjusted pre-tax profit for the 12 months to January 2026 of £864 million, down from £923 million in the prior year. Note that Mr. Schultz had flagged a 40-60 split between the first and the second half earnings, so for these interim results, analysts are looking for around £360 million, down from £406 million a year ago. Note that JD Sports is also running a second £100 million buyback programme. Thank you for watching. I hope that you and your families are all keeping well, and I look forward to seeing you again next time.